Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and the BNB/BESC market. We've got a lot to talk about today. Coming up, we've got Morgan Stanley suggesting 4% crypto portfolio allocation. Traditionally very, very bearish on the asset class, deciding to flip. Now Bitcoin is at all-time high. BSC leads all chains in 24-hour revenue with $1.61 million versus ETH in next place at 994K. We'll be discussing what is going on BNB today. And finally, when I get my voice back, prominent investor Tudor Jones says on CNBC, we are in place for some kind of blow off top in markets and more explosive than 1999. We've been reflecting a little bit on where we are in the cycle, and we'll do that a little bit more today because things are at all times high. I think I saw gold knocking at the $4,000 door again. So we'll do some reflections there. We've also got the latest on price action on crypto and NFTs as usual. Delighted to say I've got Legendary and Rahim in the co-host seats with me today. We're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice because this stuff is pretty risky and things are going up in a straight line and we don't know anything for sure. And we don't know how long that's going to continue for, but we will have a discussion about it. So do please exercise your own caution and use your own judgment. With that out the way, it's Tuesday. It's the 7th October. Legendary, how you doing? How you feeling?
GM doing quite well. Also watching the gold price with a pretty excited eye. I want it to go to 4K so I can win my little bet on Myriad and cash in on that as well, and also be happy as a gold holder about that new all-time high. It's a good week.
It's just wins on wins. What's the little? I think you told me yesterday what the bet on Myriad was. What was the bet that you liked and why did you like it?
It was let me look it up exactly. Will gold go to 4K first or to 3 point something K? Where is it? 3.3K. And yeah, what did I put in? 1.2K in that bet because it was like, I don't know, like at 80 something percent, while gold was already at 3.8K. So like less than 10% or above 3.8K, less than 5% even from getting there. So I was like, yeah, this is free money.
So you thought it was a free 20%?
Basically, I wanted to put in way more than that, but unfortunately, it's just 30K in that market because this would have been beautiful to go in with like huge size. Unfortunately, not possible. Already when I did it, I think it was just 16K in there, and like my 1 point something K already pushed the odds. So yeah, you can't just double up with one bet, double up the entire market size.
Interesting. Yeah, it's interesting to watch some of these prediction markets. I think you can't necessarily size in with a lot at the moment, so you kind of need to navigate that. But I like the experimentation, like the exploration.
I have a super like crackpot bet on Polymarket open as well. 1K Trump winning the Peace Nobel Prize, just on the off chance that they will manage to get the peace deal through and he's going to take that thing home this week, would be 20x. But I would just love to have this post on X more than anything.
And remember, when you're playing the prediction market, it doesn't need to actually happen literally, right? There could just be something that happens in the week which starts to make you think that he might, and you could double your position, right?
Yeah, exactly. You just need one comment, one rumor, it doubles, and you can cash out. They did that with other bets in the past as well.
But like in the next 5 days, they announce another ceasefire in the Middle East, and something like the Middle East is going to be solved, even if it isn't. And then Trump's thing goes up. Interesting. Rahim, welcome back, my man. Feels like it's been a while since we've had you on, since we had last week in Singapore. What were the highlights for you? How are you looking at the market now coming back from Asia?
Before we get to that bit, it's so funny. Ledge went from like bidding dead animal coins to now Trump winning like the Nobel Prize. Absolutely hilarious. I love our space. Wouldn't change it for anything in the world. But Singapore was really, really awesome. I think I remember talking about this last year and I made like a big tweet about it. And I feel like my insight whenever I go to like these Asia markets is to just get like a very different perspective of like what's happening. There was a big conversation that everyone spoke about, that how Korea, for example, which I didn't go to, had a lot of retail involvement, anything IP related, even at like major crypto events. It's always good to kind of like look into information in that pockets. And obviously with like BNB pumping, and like, you have the BSC chain and like a lot of these Asia ecosystems pumping, I think it's kind of important to like look into projects, people who are building in this ecosystem. We'll get to like the some of the news from the roundup, but like it shows how much pull Upbit has, even from an exchange point of view, which I feel like the Western market really downplays. But it was really nice. It was really nice to see that there are still some companies, some protocols who are spending insane amounts of money on like random events and parties that you should just like not go to, and it's just like bad strategy. I don't even know what the point is, but like having meetings at like smaller pockets, connecting with like people, building those business relationships in like more quieter settings is definitely the way to do. I feel like you and we met like a bunch of people. The way we did it, super happy with it, to be honest.
Indeed. Yeah, I think so. The reference to Upbit is the Doodle listing, which kind of sent it up a lot of percent this morning. If you haven't seen that token move on the Upbit listing, that is pretty big, the biggest exchange in Korea. And then, yeah, talking of events, you yourself put on quite a nice art style one in Singapore. That was very nicely attended, very curated, very just a good place to have some good conversations in a slightly more quiet, some would say sophisticated environment. That's how I would put it. But any thoughts on how it went for you there, and any of the rest of your plans coming up?
It was just super interesting. Like more and more people are just like interested in moving to Dubai. I think that's what the goal was. Like that was my event. It was literally called Dubai as Alpha. Like I'm literally doing this in Singapore. So yeah, like without that, like I really want the world to kind of know what we are building and kind of get everyone to like realize the potential this space has. Like there are so many builders moving here. There are so many products. Like 2 years ago, this wasn't the case. Even 2-3 years ago, you would see a lot of traders and consumers, essentially, whatever that means in crypto, were people based in Dubai. But like now you're seeing like family offices, you're seeing hedge funds, you're seeing a lot of builders move. And I think it's kind of it goes in line with like exactly what I'm talking about, that the Asia market is so significant that the West ends up missing a lot of it. And I'm hoping that with everything that we are doing, that we can bring a lot of light to what's happening in the Middle Eastern market to the rest of the crypto space, I guess.
I like it. Love the perspective, love the vision. Also, just incredibly bullish on the Middle East and Singapore and Asia. Like I think being aware or having touch points in both places is an increasing priority for me over time. So I just really like Singapore. Second time I've been in the last 2 years, and I want to spend. I think it'll be a standard trip for me every year now to go back. Really enjoyed it. But look, let's get into it, guys, to get you up to speed with everything that you need to know that is going on in the markets. As usual, we'll start with the majors, starting with Bitcoin, which is still at $124,000. We've got ETH up a couple of percent to almost $4,700, up 13% on the week. BNB up 6% to almost $1,300, up almost 27% on the week. That is insane moves. We're going to talk BNB in a bit more detail in a bit. And just so you know, CZ's dog, a meme coin literally called CZ's dog, is up 80% on the day, in case you were looking to invest in some CZ animals. XRP is flat at $2.98. Solana is flat at $230. And going down, our other favorite alternative major currencies, got Sui flat at $3.60, and Hype is actually down 4% today to $46. Getting into the meme coin side of things, as I said, CZ's dog outperforming most other animals and other meme coins. We also have Dogecoin up 1%, Pepe's flat, Pump is down 2%, Pengu's up 6% today to almost 33. Just above 3 cents. Bonk's up a couple of percent. SPX is down 7. WIF is flat. Fartcoin's up 9, back to around 73 cents. Looking at what else we've got here, Mog's up a couple of percent. Useless coin, which is the one Bonk guy likes a great deal, is up 13%. Things definitely trending towards the BNB chain, right? We're going to be discussing that in more detail. So things on BNB warming up. Everything else kind of chugging along, to be honest. Nothing really of note to mention there beyond what we've just said. Getting into the main headlines, which we'll discuss, and the rest of the roundup, we've got Morgan Stanley suggesting a 4% crypto portfolio allocation after being historically very, very bearish on the space. So we'll reflect on that in a second. We've got BSC leading all chains in 24-hour revenue with $1.61 million versus ETH in the next place at 994K. And prominent investor Paul Tudor Jones saying on CNBC, we are in place for some kind of blow off top in markets. It's more explosive than 1999. So we'll be having a bigger discussion today on what this all means, as some more traditional analysts and organizations and investors are saying, right, you know, we're going to keep going much higher and we've got to allocate more to this industry, versus the what I would describe as some clear froth, being BNB season and a lot of the meme coins on BSC kind of ripping. So how do we square these two things? We'll go into detail in that in today's show. Before we do the rest of the roundup, Ledge, anything we need to know on the NFT side?
Yeah, got quite a few movers there. Checks being the main collection, being up 32% on the day, 62% on the week. That probably is to do with the token work strategy, which they are receiving. Moonbirds, Pudgies are flat, 3.2 and 9.9 ETH floor respectively. Doodles had a nice move up. They're up 10% on the day, 1.12 ETH floor. Still up less than the Doodles token, which you said got listed on Upbit, but a green day. Miladies also going to get their own strategy. Up 6%, 1.9 ETH floor. Even Bored Apes up 1.5%, almost back to a 9 ETH floor. Azukis are continuing their trend upwards. Another 3%, total of 22% in the green on the week at a 1.83 ETH floor.
Like it. Getting into the rest of the roundup, I think this is pretty big news. Trade.xyz announces waitlist live for traders who have done more than $5 million of volume on Hyperliquid. Obviously, that does exclude a lot of people, but it was retweeted by the Unit account. So I believe this is where perp stock trading will take place on Hyperliquid, with the idea being that you should be able to trade anything on perps. And I think that is what is being created here. Connection to Unit to be confirmed, but I think you want to take a look at that ASAP, or it's going to be valuable even if you can't get in right now. ARK Invest acquires a $10 million stake in Securitize, leader in tokenization of digital assets. BNB's DEX PancakeSwap rebrands its IFO as CakePad, offering early token access with no staking or lockups. I feel like that might be something to take a look at if we're going to be in some kind of extended BNB season. So I want to make a note of that and take a look later if I have time. India plans to double down on central bank digital currency. Venturals announces deposits open on October the 16th to provide hype for making private markets public. This is that interesting protocol that is going to be facilitating the trading of private companies online. I believe there's a protocol on Solana that is doing or is going to do something similar on Solana too. So that'll be an interesting new market type that is being created on chain. Rainbow Wallet announces Hyperliquid perps now live in wallet. And finally, USD AI announces a $100 million cap raise coming on October the 8th to address the upward price depeg. This is the protocol which has exposure to GPUs. And you can kind of deposit your stable coins and earn points. And because it's so in demand, those dollars that are getting put in are getting bought at a higher price than what their underlying is worth. So because people are speculating on the ability to enter into the ICO. So those $1 is worth more than $1. They're going to be raising more capital tomorrow. So if you missed out on that, I suspect tomorrow is the time to get in if you would like to. So that's the roundup and the headlines. Before we get into the main stuff, Legendary, what is catching your attention around the space from the other bits of the news or anything else?
Two things I want to comment on. One being a PSA on the USD AI stuff. Obviously, if we talk about that on the show, I said what I've been doing there with yield tokens, and on the PT, on the principal tokens, you can currently earn, 50% yield or so. But just keep in mind with that the yield is based on the current price of USD AI, which again is what was it, 1.06? I think now it's like $1.04 or so. And basically, you would have the estimate that this will repeg downwards. This will go back to $1. So you just need to factor that in when looking at the yield numbers, that they are based on $1, which is valued at above $1. And if you basically have this cap raise, you go in for a short term, then it repegs to $1. You might run into the risk, if you exit the position too fast, to actually be down, despite thinking that you're farming a 50% APR on that.
Okay, that's a good good point to note. Would you want to enter in the cap raise? Are you already in? What's your thinking there, Ledge?
I kind of want to enter the cap raise. Yeah, I want to throw some money in. I've been farming that. I've been doing quite well on the points despite starting quite late, because it was catching up with massive volume on the yield token side. And I'd like to get some money in there. I think it's going to go pretty quickly. But with that being said, I said Plasma is a good one because it's unlocking stables. I feel like all of the stables that I got back from Plasma, I have reallocated in less than 24 hours. So I am again in this position where I'm like, trying to get some money together to be able to serve the inner need to deploy stables into protocols.
I feel like now is one of and look, there's always risk attached to these things, right? So I'm not saying this is the wholly responsible thing to do, but it feels like you might strategically decide, if you have run out of stables because they are all deployed and you have Bitcoin, there's probably never been a better time than just chucking some Bitcoin in and borrowing against it at, I don't know what the rate is. Like, if you have to calculate what you think that allocation to USD AI will be. If you're borrowing a Bitcoin at around 10% potentially, something like that, and you're expecting to earn much more, like for example in Plasma you earned significant amounts more on top, it might be worth it in these kind of scenarios, I think. Especially when these timeframes are contracted, and I believe all of these people are trying to move fast, right? The timeframes for everyone now have been contracted, and you see something like Machina as well, which I was talking about by the guys at Dialectic. They've explicitly said 1 month of like, I'm pretty sure this is the case, 1 month of like lockups, then we move into season 1. Season 0 is only 1 month, then we move into season 1, and then there's other stuff. Because I think now people's timeframes, people don't have the luxury of farming their users for multiple months now. And if they do, then people are going to want to take their money out and go elsewhere, because it's the time. It's time to launch, I think. Rahim, what's going on your side? What's catching your attention before we hit the main stuff? So leaving the main topics aside, anything else catching your attention from the roundup, or anything else you're noticing in the market?
Yeah, there was something that I saw yesterday with one of the strategy tokens. And I think this is like something to keep in mind, that as these tokens come up, you need to be very mindful about how you trade them, what the value prop is. So the Goblin Town strategy came out yesterday. They were trading at 0.15. They ran up to 0.60 because they ended up buying about 400 ETH worth of NFTs through that strategy. And then you know what happened? It dropped right back to 0.15. So even after a 5% supply buyout, and I think like it's important to keep in mind, like, okay, there is some value in when we are talking about like certain strategy tokens, but like really be mindful about like how these ecosystems are running. What is the value proposition? Why are there like, a lot of these bullish sentiments coming across? I know we saw the Node Monkey strategy came out as well. They're kind of being a bit more strategic about it, where they deployed some Bitcoin and they're holding some, whereas like Goblin Town, they were like 400 ETH we made with their fees, boom, full poured in. So kind of important to look into that. The other thing I wanted to talk about was, I think it's funny, how Pancake Swap essentially rebranded to CakePad, and this exactly happened with Astro. It used to be called APX, I believe, and they rebranded. And they do this thing where they're like, oh, you can go and swap your tokens like 1:1. I just feel like there is something to talk about, that okay, these are protocols that people are probably like holding tokens they don't even like remember from like 21, from like 2020, and they just don't know. So there is like some supply arbitrage that, okay, I'm pretty sure there are like a lot of APX token holders that still have no idea about this like rebranding. And I feel like there is something there's a conversation to have, because it feels like there's something weird about like how much supply is available. Then you'll have like random people holding these tokens. I don't know what the price, I haven't looked into the arbitrage of the price action, and I'm sure there is something happening there as well. So I don't know, I feel like there's something happening on BNB where they've decided to like just like rebrand everything. Like, let's call PancakeSwap as CakePad, let's call APX as Astro. Interesting strategy. Feel like it's a bit questionable, but I think it's interesting to keep an eye out.
Well, I mean, rebranding Binance to Asta, right? I mean, that's the thing that is being put out there, is that they're routing a lot of the Binance transactions through Asta. That's why that volume is so high. Like, it was mirroring the volume on Asta, on Binance. So
Right.
yeah, I don't know. There's definitely a hell of a lot of energy on BSC on BNB right now. So yeah, we'll reflect on that more in a moment, because leading in all chain revenue, there's some other data points here where it's kind of gone past, it's flipped XRP in market cap to become the third largest crypto. And the meme coins have really been sending on there as well. So we'll touch on that more in a moment. Ledge, any quick thought there before we get into the main headlines?
No, nothing to add to the rebranding discussion, because if I do, it's going to be a long one, and then we're going to spend the whole show on that.
Okay, well, we are going to go in that direction anyway. So we're going to be talking BNB in a moment. We will do a little bit of more reflecting on portfolio stuff, but I think we can do that as part of the first and third headlines, because it leads us into reflecting on where we are in the market at the moment. So legendary first headline: Morgan Stanley flipping bullish. They didn't know. They used to really hate crypto, I believe, and now they do not. So what do we need to know here? What's the significance?
Yeah, Morgan Stanley used to be pretty critical of crypto, but they have now released basically updated recommendations on how to structure portfolios, especially when it comes to crypto. And their investment committee is now recommending capping cryptocurrency allocations at up to 4% for the most aggressive client portfolios. They still say that the more conservative portfolios, which are focused on income, they should not have any exposure to crypto whatsoever. But for the opportunistic growth portfolios, they could include up to 4% in crypto. That is more than what BlackRock is currently recommending. They are saying 1 to 2% weight in Bitcoin. Grayscale, unsurprisingly, is more bullish, so to speak, when it comes to portfolio allocation, saying that the optimal allocation is closer to 5%. So the big news here is that we have more and more traditional finance houses who say, hey, as part of a growth-focused portfolio, it is okay to have a bit of crypto exposure, 1, 2, 3, 4, 5, depending on that asset house, either to crypto or to Bitcoin specifically, which is quite good news to see, as it means that crypto will become more accepted in the mainstream. I personally think it's a very age-dependent recommendation. So if you're like a young person and you put like 2% of your portfolio in Bitcoin, it's not going to do a lot of things for you. If you just look at a total portfolio and you have, 100% is your overall portfolio, 2% goes in crypto, BTC runs from 125K to 600K, then your entire portfolio is like, quote unquote, only up 10%, which is what you would typically be up either way in a good year on the S&P 500, which does like 7 to 9-ish%. So if anything, I would argue that, it's obviously unsurprising coming from me, who is someone who's CT or crypto native, that I would have a higher Bitcoin exposure in there if you're younger and actually want to have a meaningful dent to your overall portfolio allocation. If you're older and you don't want to have that volatility risk of, running through a bear market, and you're maybe a couple of years out until you want to retire, and you don't want to have this massive risk of the stock market collapsing, crashing, or a BTC running into a bear market, then obviously you want to have a lower, maybe even no allocation. But for someone who's way younger, I just don't think that like 1-2% is meaningful enough to be impactful.
Okay. I think almost everyone in this industry would agree with you there. I think that makes sense. The key question for me, since we're talking about it here, and I keep going back to gold at the moment. I don't know if there's two charts which I'd love for you to bring up if you can, Edge. One is just the gold chart, which I know you can. And if you could try to bring gold versus Bitcoin charts, because I think everyone can already sense that they need a bit of Bitcoin and they need a bit of gold. Like that is, it's kind of unequivocal at this point if you haven't already figured that out. I'm a very late buyer of gold. I can't remember. I think maybe I bought the first bit at like 3.3K earlier this year. I've been all crypto, right? Like my journey started with NFTs, if anything, and has been all in crypto since then. So, okay, fine. I'm late-ish to it, but I do feel like I need it now. And I've obviously been in Bitcoin since I got in 2021 as well, although I took a more serious position in the bear market. The question for me now, and I think that more crypto native people will have on their minds, is what's the proportion between Bitcoin and gold? And I know that it's going to be dependent on each person's situation. If you believe, and this is just my thinking, if I believe that Bitcoin will outperform gold over a longer time frame, I probably want to hold a bigger proportion of Bitcoin. And then it just depends the number, right? And I don't know if there's an answer to this. It's just kind of putting it out there. Like, do I want to hold 3-to-1 Bitcoin to gold? Do I want to hold 4-to-1? Like, do I want for my portfolio of Bitcoin and gold, do I want 75% Bitcoin and 25% gold? Because I think Bitcoin is going to catch up. Do I want 50-50? I'll share some thoughts, but just throwing it straight to you, Legendary, back as you're maybe explaining some of these charts as well, if they're helpful.
Yeah, that's not the most helpful one. I'll try to bring up another one. I think between gold and Bitcoin, it's something that I still struggle to allocate. My overall portfolio allocation is 10% in gold roughly, and a bit more than double that, which I have in BTC. So I am currently at a 2-to-1 ratio with that. But that has a different.
That feels very sensible.
It feels sensible, but it also has different reasons for me. Because again, I know I say this every time I talk about that, but I think it's just important to point that out every time I say it. That for me, holding gold for longer than a year just makes it tax-free. And for me, swapping BTC, for example, into stable coins is also tax-free. So I am always going to have a preference to have gold as well, because I can swap gold to fiat tax-free. Whereas even though my BTC to stable swap is tax-free, off-ramping stables would incur capital gains. So I have to look at it from the growth perspective of also offsetting potential implied taxes of taking profits. But I still feel sensible like in my portfolio.
So I understand that from the general investing perspective, but maybe this is where we differ. I have no plans on selling my Bitcoin or the gold now. So like in that way, I can take, because I have similar tax considerations, or I did do before, where gold is treated in a very specific way for historical reasons, which means, you don't need to worry about the gains on it. I just don't think we're going into an era where I'm going to think, gold's looking overpriced here. I'm going to get rid of it at 4.5K or even at 5. Frankly, I don't know what I'm just going to hold it. Are you thinking differently then, Ledge? Because you're taking into account some of that stuff, or what's your kind of medium term to longer perspective there? Then I want to come to Rahim on this.
With gold, I can't do anything. That's obviously an asset that I will need to sell because I'm holding it off chain. I can't borrow against it because I'm not holding it on chain, because then I would lose my tax benefit. With Bitcoin, I can very much borrow against it on chain. It's something that I'm doing. So I don't necessarily need to sell BTC if I want to be productive with it. But gold is an asset that I purely hold to sell at some point.
Okay. Interesting. That is interesting. Rahim, want to bring you in here. Thoughts on that proportion? Are you messing around with gold at all? Are you more Bitcoin maxi? What are your thoughts on that proportion?
Yeah, I clearly don't even have like remotely close to the amount of gold that I should have. My story is very similar to yours. I think I got in also around a pretty similar price, and I don't have like big allocation. it is something I've been thinking about. Like even like silver, I'll be honest, like this is like it's an area that I just don't
Silver's
have
been
any
absolutely
exposure.
ripping, by the way.
Yeah, like I saw Moritz his tweet, and I remember us discussing about it. And I was like, at some point, I was like, okay, I really need to like research and look into this. Completely missed that trade. I guess like I have a question. So just going back on like the tax implication bit, like I assume this is like a bit that's around the world, or at least a lot of parts of like Europe, in terms of that. Oh, if you hold, oh, that's not the case. Like what I guess what I was alluding to. Do you think if we have similar regulation around like Bitcoin with tax, that we would see that okay, maybe this is the time that gold, that maybe I should sell some gold and maybe move to Bitcoin? That would be like a better trade, that a lot of people are holding gold for the exact same reason, Ledge, that you mentioned, or you don't think that's the case?
It is a very diverse tax landscape. You have countries in the EU who, like Germany, who have long-term tax-free periods if you hold BTC or crypto longer than a certain amount of time. Austria had the same for a long time. Then you have places where like the crypto-to-crypto swapping is tax-free. You have places where you can hold gold for 1 year and be tax-free. Others where this is absolutely not the case, or the holding period is way longer. So we don't, despite being like the European Union, the tax regimes are very, very different in every country. So it's hard to apply a generalized like incentive layer, because each and every country is super different.
Yeah, we shouldn't get bogged down in tax, and we are certainly not tax advisors. Every jurisdiction is entirely dependent. So do check your own tax regulations and requirements wherever you are around the world. Funky, your hand is raised. Want to bring you into this conversation on Bitcoin versus gold, and to get your perspective. Welcome to stage, my man. What are you thinking?
GM, just two quick things. One, Matthew's in the audience, and obviously he's our resident IRA who probably have some very intelligent things to say, because I know he was raising his hand earlier. And I don't own any gold. And I feel like, having listened to you guys for the last 6 months, I feel like this is something that I feel I should have some sort of position into. And I was just going to offer a cynical take in terms of the whole portfolio allocation. I honestly think it's just the TradFi boys trying to just gobble up all the good coins and say like, oh yes, you only need 4%, and then do it through our, mutual fund or whatever, so we can charge you a fee. I mean, again, very cynical take, but I still think some of these allocations are quite low, but I understand that they're just very risk averse as an industry.
Yeah, I think that's fair, man. I think that's fair. It's very, very low realistically. And something that I did reflect on a little bit. I know we've been talking about this on Twitter for a while, and gold's complete melting up, but correct me if I'm wrong, mainstream media has not been talking about gold that much. I don't know whether the news is now entirely divorced from the financial realities of the world, and therefore chooses not to weigh down its constituents with any meaningful information about the poverty that they are moving towards. But it seems to be that it's kind of just happening, and I don't know, a lot of the people that I'm in conversation with in the real world just kind of letting it happen. It's just like gold just keeps ripping. No one has any gold, no one has any Bitcoin, and the value of their actual money is just disappearing in front of them. So, I mean, we've been talking about this on the show a lot. I think it's probably worth moving on from it now, but yeah, it says something about the position we're in, that gold is just doing what it's doing, and that people like us who are, not boomers, so crypto native, so whatever, suddenly started stacking gold. Like it's pretty crazy. Okay, so that is that. What was the headline you were even talking about, Ledge? I can't remember where we got into this. Okay, Morgan Stanley's portfolio allocation. Okay, so we're going to come back to some more traditional investing stuff in a moment, but we got to go to BSC. Binance Chain has been leading all chains in 24-hour revenue with $1.61 million of chain revenue in the last 24 hours versus ETH in the next place at 994K. Ledge, I think the screen is not quite sharing at the moment.
By the way, it changed a bit. Currently 2.4, almost 2.5 mil for BSC. Tron in the second place with 1.4, and ETH in the third with 1.3 mil. So it's still,
nice.
The revenue in BSC is still growing at the moment.
Okay, so it's just ripping ahead at the moment. In that same period of time, in the last 24 hours, BNB has flipped XRP in market cap to become the third coin on all of the charts now. You've got Bitcoin, you've got ETH, and then you have BNB. And then finally, we had this tweet from Bonk Guy just explaining a little bit about what has been going on the BNB ecosystem. If you haven't been aware, it said at least 3 new meme coins have gone from 0 to 100 to 200 million market cap in the past week alone. To put that in context, the things that have been happening on Solana, for example, in the last few months, is that everyone was kind of complaining that newer coins could not get past like 30-ish, right? 30 something seemed to be the ceiling. I know maybe there were a few that went above, but really a lot of things were getting capped around there. On Ethereum, you've had these NFT strategy coins, the main one being Punk Strategy, hitting as high as 300 mil. So that's been a big runner very recently. But aside from that, I think the ETH kind of coins have not seen huge volume. But at least 3 new meme coins have gone from 0 to 100 to 200 on BNB in the past week alone. In his opinion, this is in Bonk Guy's opinion, this has created the most PvE atmosphere we've seen in the trenches in ages. There are 2 main catalysts for these new BNB chain meme coins going turbo parabolic. One is CZ, of course, founder of Binance, who is being far more active on the timeline than before, and Binance listing expectations. So yesterday we had Asta getting listed, their decentralized trading venue. That saw the price go from around 180 something all the way to 210, 215. I think it's dropped down to around 2 now. And, as I mentioned, CZ's dog, which is currently sitting at 37 mil market cap, but up huge in the last 24 hours. So a lot of activity taking place on BNB. One of the things we've always been cautious of is that we do this every cycle. We always have a BNB season. It doesn't typically last very longer, but there's a few catalysts for why we think this might be a little bit longer. One, CZ is back in charge or being super active on the Binance side. It looks like he's going to get pardoned in the States. It looked like the DOJ was going to step away from their kind of more controlling purview on what Binance is up to. And it seems like kind of got a bit of free reign to go out and do what they need to do here. I think they've also lost they've lost some activity to Hyperliquid, and they're definitely wanting to press that competition button harder now. I think that is definitely the case. So, they're very, very incentivized to get this competition going and to start pushing their own chain far harder. So that would be the argument for why this lasts a bit longer than just a traditional BNB season. Ledge, and then Rahim, after, curious for your take, whether you think this is going to last a little bit longer too.
I think it might last a bit longer. I feel like maybe that season concept with BNB is also a bit misunderstood, because there's like
In what way?
There's always stuff to do on BNB, and there's like always been things that have been running, that have been active. Ultimately, projects like CDFI started on Binance Smart Chain and did so many launches throughout the last years. So maybe the season logic is more like BNB's attention and BSC's attention in, like, quote unquote, the Western mind. And if that will last longer, which I think, but per se, there's always stuff going on BSC. It's not that the chain becomes a ghost town for 11 out of 12 months in a year and then comes back for one like parade month and then is like dead again. Even like some of the robotics tokens, which I have been buying, I have to buy on Binance Smart Chain, like Peak, because I don't want to buy it on the L1. I just buy it on BSC.
Okay. Yeah. Fair point. Rahim, what are your thoughts on BNB and CZ's interventions over there?
Yeah, I guess just like going back to what Bonkai was saying in terms of like this PvE trade thing, this wasn't very different to like how Solana was like when VIF and stuff came out. Like, you have to realize that a lot of this has a lot of nuance with not 20 trading bots out there for it. You don't have like, to my knowledge, at least in the Western world, you have so many people who like stream like live trading for meme coins on Pump Fund or whatever. You don't hear about that. I don't think there are enough tools out there, and maybe I'm ignorant about them, in regards to like, wallet tracking and like, looking at like the biggest keywords or whatever. So I feel like this whole PVE trade concept is, I would argue, pretty much existent in all chains in its early phases, until the narrative gets so bullish that people start building that, let's build the Photon, let's build the Axiom, let's build like 15 other Telegram bots. So I think that's important to keep in mind. It is like an interesting landscape, because I was looking at Dogecoin's price action and relating to everything happening on like BNB, BSC. Dogecoin isn't pumping like it should be if you compare those numbers to it. So you're like, okay, if you're looking at the nuance of like the Asia market, and again, I always say this, Dogecoin is like such a different beast. No one talks about it on Twitter. I believe last week there was a day where it added like $5.5 billion to its market cap. That's like, you can combine some of the top meme coins this cycle and they don't make up 5.5 billion. So it's interesting that Dogecoin hasn't pumped. Kind of interesting to keep an eye out on it. But I would say, so I feel like the energy in Asia, even from like what I heard, even on the, you look at what's happening with like Upbit, and you hear like all the stories from everything on the story protocol side and everything from KBW, Singapore. Like in general, Asia is like feels a bit more stronger. One of the metrics that I always use is the amount of like people looking into doing like these PR events. They kind of doubled in Singapore compared to last year. And I track this like very vigorously, because I think it gives me an idea of like how much people are spending on marketing, what's the appetite people have, what's the exposure that people are looking into. Obviously not empirical data, but I think this is gonna like last for a while. And like CZ is back, like he's posting like anything. So yeah, I would probably be looking into some serious BSC ecosystems for a bit.
Okay, let's do something here. I appreciate all of those takes. I think it's going to be slightly more extended than usual. Frankly, I think this time is different from the other ones, at least in regards to BNB. But Runelord makes an interesting point here in the YouTube comments. Feels like everyone here has a portfolio completely spread out all over the place, and that's when things get hard, right? It's literally like your brain is getting torn. Your brain is getting torn into different parts of crypto, because your money is literally getting tied up in different places. It gets hard to track, gets hard to stay focused. So important question, boys. Legendary first, then Rahim. If you had to pick two verticals, two ecosystems, and you can define it however you like, whether it's chain specific like BNB or Solana, or if it's like a theme like robotics, what are the two things you would take all of your capital and concentrate in right now?
I like the question.
Because this is actually I'm always trying to do something like this psychologically. I'm always trying to do fewer things, even from the professional side of like the show, like trying to figure out what are the two core things I need to be focusing on now, or the one core thing, and like divert all my attention to that. In the same way with investing, okay, things are getting a bit dispersed. Where does this capital actually need to be now? How do we concentrate here? So Legendary first, then Rahim. What do you think?
I like the question. If I had to pick two things that I would be focusing on, for me, on the one hand, it would be farming yield with my stables and farming airdrops by that with stuff like USDAI and others, Solstice, Plasmas, all the things that we also did. And then the second one, that would be my asymmetric bet, and would be the robotics AI sector again, to just deploy there for potential higher returns if I only had to pick two things.
Okay. I definitely agree with the first one. Plasma worked out way too well for people not to be considering that. So for me, my picks there are Machina, which I think is kind of a little bit off the radar. I like that one personally. That was like my own research, my own thought process going into that. And then I didn't really get into the USDAI one. I think I like it. Maybe I'm going to try and get into cap tomorrow. There's probably some others that I can't remember off the top of my head at the moment. I'd need to check, but I like that. Robotics, I don't know. This one I'm not as certain. It gives me the AI virtuals vibe, which obviously ran a hell of a lot last year. So it's like it could go. Is it too soon after the AI virtual stuff for then robotics to go? I don't know 100%, but that's just my quick thoughts there. Admittedly, definitely not super educated on the crypto X robotics stuff. Rahim, what are your two?
Yeah, I think for me it would be like I pretty much agree with like the first the ETH farming thing. I think I've spoken about this on multiple occasions. I feel like this cycle feels way more closer to the 2017. Like if you even look up like podcasts and media from like 2017, it feels like okay, it's in lines with like what's happening right now. It was all about like DeFi, it was all about like yield farming. I feel like this 2021 was like a lot on like this consumerism, whether it was on the gaming side, whether it's all I don't know, like on media side, that narrative has completely flushed out. So I think one thing's for sure, like I don't think I'm touching anything that's consumer related unless I see a big data point of consumers coming. I definitely think on the yield farming side, and I guess like my others would be is to just like look into protocols that are essentially doing this like whole buyback mechanism. Like to me, it's like
Revenue.
I know it's yeah, I feel like I know it's like a sketchy road to walk and stuff, but it's like it's the thing that you and I we were talking about, like B-check. When your token gets listed on an exchange, whether you're a perps text, whether you're like a gaming ecosystem, whether you're whatever, now you're being compared to all the 50 other 100 other coins and stuff. When someone's trading on Binance, they're looking at what token has the biggest upside, not like oh this gaming token is competing with other 20 games.
True.
No, gaming token is competing with like Solana, with AVAX and this and that. So I am like, like let's just go back to roots. The thing with like a lot of these experimental stuff, whether it comes on the AI, whether robotics, super bullish on the industry. I just don't know if we've hit those gems, those protocols that are gonna last for very long for me personally. But and maybe just like slightly touching on what Rune Lord was saying, I've actually formed a very different thesis, which I feel like I used to have before. I actually think the biggest thing you need to do when it comes to investment is get the ability to be able to distinguish what is the stuff that you're holding long term and what is the stuff that you're going to paper hand like crazy. I feel like the NFT cycle taught me like all this like max hyper bullish maximalism of like believe in something, this and that, kind of like I round trip like so much money. I think a lot of times you need to like jump out of like certain trades and realize that okay, this trade is done. Like again, I'm super bullish like on Hyperliquid. I think like what they're doing is like super amazing, but like their obviously biggest value proposition was their perps ecosystem. Now you're looking at like a lot of people diving into that, whether it's like Lighter, whether it's Aster. It's important to kind of keep that in mind. I'm not saying go sell your hype. I still have a lot of hype, but I feel like the more I'm going into the cycle, I'm like just stack everything to BTC, jump out of narratives. Yes, you might miss out that extra 10-20%, but if you've already done like a 50, 60, 100, 200%, like why are you playing this game for like longer and stuff? So I don't know if that answers your question, but yeah, like essentially that's how I'm looking at it.
Yeah, a lot of interesting takeaways there. I remember on the show quite some time ago saying that hype is appropriately valued now. There was a period of time, and this is how my investing style ideally is taking assets from undervalued to appropriately valued. I don't know if you necessarily need to sit in a coin until it gets overvalued, or I think a lot of people in this space, this is what a lot of people in the space think is investing. They buy something at a price, whether it's probably undervalued because a lot of stuff is worthless. And then what they want to do is take that to a mania price. And the bet that you're making that things go to a mania price is actually a huge bet, because there's all kinds of things outside of your control for people on crypto Twitter to get on board, for some big whales to buy, for the price to go from like 200K to 40 million. Like that bet is a very unlikely bet to take place. It obviously happens in the space. That's why people do it. But it's not it's not like a winning bet. It's not something that you can place and be confirmed that that's going to happen. Whereas I think undervalued, hype at $20 to hype at $40 is a great bet to make. Now, you're betting on the team executing more, so that $45 looks undervalued in 6 months as they continue to kind of build things out. So I think it's still, as you kind of said, it's still a decent bet, but it's not the blatantly obvious mispricing as before. So I take your points there. That is interesting. Just looking at Rune Lord's the second comment, Bitcoin hype, SPX, and stables for me, since I am from an Indian family, they've done their part with gold. I don't feel a need to hold it. Eddie in the comments saying hosts have too much bear and bull market PTSD. B-Check was bearish last week. I said I need some insurance. And I think I'll happily get liquidated at 5. I'll tell you my liquidation price if anyone wants to go and liquidate me. It's 5.1k ETH, I think. So it's not that far away, frankly. You can go ahead and liquidate me, Eddie. I hope you do. I hope you do. Then I can sell some of my other bags higher and hopefully make up for it. But yeah. Okay. So look, we kind of I wanted to kind of go around the assets a little bit to get a sense of what we were thinking there. Final headline then for today, and maybe we'll touch a little bit more on the various assets around as part of this conversation. Rahim, Paul Tudor Jones came out and was getting pretty bullish again. One thing I will say before, and maybe this is speaking to Eddie's point a little bit, is most people on Twitter at the moment that I can tell, as soon as we go down, it's all over. As soon as we go up, it's like we're completely back. And I don't know. I think people are finding it very hard to read this stuff, which I think is important for you to be positioned both ways. Basically, you have your proportion of stables, and then you have your core holdings. If that's just Bitcoin or if it's other things, that's probably helpful. Because I don't feel like many people have a great read on what's going on at the moment. Even though I just want to share this one take before you go, Rahim. I just tweeted this. I was searching Paul Tudor Jones as preparation for this segment, and there was a tweet that I did 1 year ago, almost to the day, on October 23rd. It was a clip from a Paul Tudor Jones interview that I had shared. I'm just going to put this in the private chat if you want to bring it up. The tweet was on October the 23rd, 2024. Hard takes to swallow from billionaire hedge fund manager Paul Tudor Jones yesterday. Must read for takes on US politics, markets, and Bitcoin. Said markets suggest Trump will win, but betting markets are likely to be skewed by Republicans. But he was positioned for a Trump victory, and it just had the Bitcoin price up on the screen at the same time. You kind of lose. It shows how you lose perspective in this space so quickly. Bitcoin at that point in time was 66,990. This was pre-Trump victory 1 year ago, 12 months ago. And you think of all of the drama and the roller coaster and the emotions that people feel in this period of time, or even in the last week in this space. And Bitcoin is basically about to be 2x from that tweet 1 year ago, which is a phenomenal return for the best asset in crypto to literally 2x. And it's just for some perspective. I think people might have been lost with that specific statistic. But Rahim, coming to you now, what did he have to say to update us? What do we need to know?
So PTJ, as people like to call him, Paul Tudor Jones, essentially came on CNBC and he spoke about that. Okay, like you look at Bitcoin, it's sitting at like 125K. You look at gold, which is up 40-60%. He's super bullish Bitcoin, like long term, but he feels like we are close to the 1999 blow off top for the market. What he's referring to is essentially the crash that happened in 2000, especially around the tech and the .com era industry. Why is it important? So I guess it's kind of important to talk about who he is for people who don't know. So he essentially is a co-chairman for the Tudor investment company that he started in 1980. He really built his name because of the short trade that he did in 1987, I believe, which was the Black Monday trade where he made millions of dollars shorting the market. So he's considered like a prominent figure because of his like legacy trades in the industry. So when he said this, there was a conversation to be had that, okay, you have multiple assets, gold, silver, you have like tech stocks doing well, you have like crypto doing well. So he essentially spoke about that. There was an interesting tweet that was put out by Jeff Park yesterday, and he was just essentially talking about that, like there's often people compare like olden periods of time as like a nuance of that, okay, this particular crash or like this particular top reminds me of this particular era. And he's saying it's kind of bizarre to look at it from that lens, and he uses like small metrics, which I think are pretty valuable things to look at. He was like, okay, like, back then, um, uh, essentially, like, you have your US government that's spending an insane amount of money and is in debt, which was not the case for US back in the days. They were actually adding money to their economy. He also spoke about that because this was like before internet and before a lot of countries were connected in the way they are right now. Back then, you could have like the US market implode and it wouldn't have the same amount of impact everywhere around the world. He's like, now it's different. You have like bigger pipelines with China, with other countries, whether it comes to like trading commodities, equities. There's like massive pipelines that get affected if the US market fluctuates in positive or negative. He also talks about the Federal Reserve was not putting in as much money into the economy then as they are now. So he's essentially using like this whole idea that, okay, back then a lot of the industry was controlled by private firms, which I would still argue is a good degree of it. But he's like, you look at the rise of the internet, you look at Bitcoin, which is in the hands of the common people way before it came into the hands of the traditional finance world. So he's like, it's a take that needs to be looked at with a pinch of salt. And I kind of agree. Like, we see this all the times that people use the nuance of like 5 years ago, 10 years ago, and this is a very long time ago. So interesting conversation, interesting to take, especially on the AI bubble side of things that he essentially spoke about on CNBC.
I like it. Okay. And as I said as well, I think a lot of people people come out at all-time high, man. People come out at all-time high and say all kinds of things. They weren't saying it at 108, I don't think. Well, to be fair to Paul Tudor Jones, he was saying it at 66 as well. So, but the harder question now is that, okay, we've doubled up from there in a year. So how are we feeling about that now? Funky, your hand is raised. I want to bring you in on this conversation before we close out today. What is your take, my man?
So yeah, I was gonna say, just because, being the older guy in the room, I distinctly remember this, right? Like, you guys are pretty young when all this happened. And if this were the case, if we are heading toward a .com bubble type burst, the market's absolutely climbed a wall. And I'm talking, it looked like Bitcoin. If you go back on the Bitcoin chart from like October in 2020, if you guys remember the last run, it just exploded from like 10, 11 grand, whatever it was, to 60 something in January. That's what happened in traditional equities. Like, within the last quarter of 1999 into the very beginning of 2000, when the bubble actually burst, you look at the chart and it starts crashing. It was an absolutely insane. And you will know, just like you guys called sort of the frothy top in January, you guys nailed it last year when you said election to here, lock in. And, and I didn't even believe it. And you said, I think when he gets, brought in officially at the end of January, that's when it's going to, kind of peak. And you guys absolutely nailed it. I think we're going to see something maybe quite similar. But I also still, in the back of my mind, all these TradFi people saying like 4-year cycle's dead. Arthur Hayes is about to write something about 4-year cycle's dead. I think if we have that velocity where it just does go straight up a wall, yes, I'd be incredibly scared. And I probably even sell some Bitcoin, just because I'd rather reposition and buy more in the bear.
Interesting. Yeah, a proliferation of the 4-year cycle is dead, or any idea that cycles are dead would worry me deeply. And that's the kind of thing that, I don't think cycles are dead. As general, I know a lot of people saying the 4-year cycle is dead, because I think it's technically supposed to be done today, or like in this week is supposed to technically be the end of the 4 years. To be fair, we're seeing some nonsensical stuff. I'm kind of open to the idea that we can go further, just like every good optimist would like. But I'm also very persuaded, as I've been speaking about, is like this idea that the market is just a political utility now. And, we moved in a very particular way around the election and the inauguration. Actually, it wasn't just the election result, right? It was the inauguration as well. And then, okay, we've got midterms next year, right? So I think people have to, you got to have the political stuff on your calendar, I think, now. We said it was the president's market for a long period of time at the start of this year, and it might just become one again pretty soon. I think that's my kind of early thinking, looking forward to next year. Ledge, coming back to you to get some reflections on that conversation before we close out.
Yeah, on this 4-year cycle thing or not, I feel like it's not a conversation that I'm like too interested in for my own portfolio, whether this is a thing or isn't a thing. I'm more like to anchor it to specific events like we did with Trump's presidency last year. And ultimately, I think I said it on the show a couple of times that towards the end of the year, I'm looking at taking profits, but that's like more of a result of how I think this market has been going and what is to come politically. And not so much because, oh, it's now 4 years and 2 months in December, so we are overdue for
100%.
a correction. I just don't like to look at like past market timings to be like, oh, it's 1096 days. For this reason, this will happen because this happened 1096 days ago.
Completely agree. I feel like we operate best on like this 3-month time horizon. I've said it before on the show. Back in November last year, we kind of looked forward at inauguration, as Funky mentioned, and my instinct is, in a midterm year, that's going to play a role. So the show keeps going on. The show will go on. Everything's at all-time highs, and frankly, I think it probably, if we're going to get comfortable around here, if we can see the price like get comfortable around here, I suspect we keep going. Maybe we cool down a little bit, but I still don't mind. If you're of a view that you want to take some insurance, it's a great time to take it now, right? Like, you put a short on for something and then get liquidated at, way beyond any all-time high. And if you get liquidated, then fair enough, because we're at all-time highs. So not a bad time to take some insurance as well. But that's it. That's it, guys. I enjoyed today. That was a good conversation. Came up with some interesting conclusions. We do this every single day, Monday to Friday, 7 a.m. Eastern time, live for 1 hour, live on X video, YouTube, and you can catch us on Apple and Spotify podcast too. Thank you to my co-host, Legendary, and Rahim and Funky for his additional contributions. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you on the other side. Bye-bye.